from India Inc. We've got with us now Mr. Shyam Srinivasan, MD and CEO of Federal Bank, and also Mr. Unni Krishnan, MD of Manappuram Finance, to try and understand their reading of the statements made on gold loan companies, gold financing companies. Mr. Srinivasan, sir, if I could start with you, what is your reading of the policy? First of all, a 50 basis points cut. Does it immediately mean that lending rates will start going down?
Firstly, we all applaud the decision for the rate cut, a very bold and encouraging move. Will it translate to a rate cut? I would think in the course of the week or so, banks will recalibrate. But my own feeling is there will be some pass-through certainly. The quantum of the pass-through has to be evaluated in the overall context of liquidity and the cost of funds coming down. But certainly there will be a pass-through.
And can the pass-through be as much as what we've seen on the repo rate cut, or can it be, more or less? How do you think it will play out?
Early to call. There are, many things, including comparative factors. But as a bank, we had already dropped 10 basis points only 2 weeks back. So we anticipated a liquidity easing, B, the likely change in rates. So we had dropped, and I would think that may follow through. The quantum, I can't quite comment yet.
Okay, fair enough. Sir, is this move to completely ban any penalty on prepayment, home loan prepayment? Is that worrying you?
No, actually we had already done that. This is only, I think, articulation of what they had been prescribing for some time, and it's come through the policy statement. But I think in the last early February, we had already waived off prepayment penalty charges.
Okay, and it hasn't resulted in any kind of volatility or any kind of asset liability mismatches, because now people have the freedom to foreclose on any given day and move on to a different bank which might be offering a lower rate.
You can't look at these things singly, because rate the foreclosure charge is only one element. The people foreclose only because either their interest rates are high, or they're unhappy with the service, or they're just shifting from a location A or B or C. So there are many parameters. So I don't see there's going to be a flood of movements from bank A or B or C. And home loan rates tend to be more or less in the same region for a client based on his credit standing. So I don't see that as an issue at all.
Finally, Mr. Srinivasan, just want to understand, are you also lending to gold loan NBFCs? If so, what percentage of your loan book is going towards this lending?
Firstly, we are a big gold loan bank, as in we do gold loans to the end consumer. And that's a growing and a significant part of our incremental growth in the portfolio. Lending to gold loan companies is like any other lending to any other NBFC or corporate, based on the credit and the track record and the potential of those companies. At this point in time, our overall lending to the large gold loan companies cumulatively put together is maybe 300 crores.
And that is what proportion or what percentage of your total loan book?
About 4%, 4.5%. Our total loan book, about 5,500 crores is our total base. So
Okay.
Sub 4-5%.
So, Mr. Srinivasan, quickly, what is your opinion of the caps that have been put in place? I'll just reiterate that for the benefit of our viewers. The Reserve Bank has now reduced the cap from 10% to 7.5%. Basically, my understanding is that you cannot lend to a single NBFC more than 10% of a bank's total assets. Is that the right reading? And what is your view of the caps and the fine print that's been announced today?
On the cap, it's very evident that the regulators are looking to sort of moderate the gold loan NBFCs, and they're sort of had probably stratospheric growth in the recent year or so. And they have been taking many measures, including the LTV restrictions they had placed a few months ago. So in that direction, it is an impact for those companies. But from a bank's point of view, it is only a sectoral cap which we have anyway self-imposed. And for a bank, this is a positive outcome, because it places us even better from a point of view of our ability to lend and reach out to retail consumers who are looking to borrow from using gold as a collateral.
All right, Mr. Srinivasan, then we'll leave it on that note. Thanks for joining in. Some quick thoughts on the policy announced today. That's Federal Bank saying they've already waived off their prepayment charges, and they're lending to gold loan NBFCs. About 4% of their total loan book goes towards gold financing companies like, not sure if Manappuram or Muthoot are among that list, but like Manappuram. and Muthoot.